here we are with Family Hour, empowering families one episode at a time. Today is a Wednesday, and we are glad to have you watching us. Wherever you're watching us from, we are coming to you live from the heart of Kampala, Janan Room Church House, level 13, and we are looking at taxation now. Today, in a special way, we are looking at taxation of individuals. So I know there are very many questions that come about when it comes to taxation. Of course, there are very many questions that come about, but most of those questions will be answered. Of course, for you who is joining us for the first time, we've had quite some time discussing taxation, and yeah, we are still moving with taxation because we want to bring this knowledge to you so that you can know why it is important to be compliant when it comes to paying taxes. But you can you can be part of this conversation by joining in on our YouTube channel, that is COU Family TV. We are streaming live, but also you can send in your question or comment on our Facebook or X accounts, that is COU Family TV. With us is, of course, our tax expert we've been working with from when we started this series of taxation, and he's from Demo Consults. This is a tax advisory company or firm. He's none other than Dedan Mutatinensi. It's a pleasure having you.
Thank you, Mr. Mukalazi.
Yeah,
happy to be here once again.
And a good evening.
Good evening to you.
We believe your week so far, because we last met last Wednesday.
Yes.
It is now a week gone.
True.
How is that? How has it been?
Well, we are moving.
Okay.
Supporting Ugandans, supporting businesses as they comply with the tax regulations.
Sure. That is very, very empowering and interesting. So do we want to look at taxation of individuals? But just to be specific, now that we are looking at individuals, why is it specifically for individuals? I mean, are there special taxes for individuals, and why only individuals and not general taxes?
Yeah, thank you, Mr. Mukalazi, for that wonderful question. Remember, from when we started this,
yes,
we talked about registration, and the next session we handled compliance.
Yes.
So as we are looking at compliance, we are being a bit general, registration are being a bit general, but now we would want to get into the details.
Specific.
Of how entities
are
taxed. And we talk about how entities are taxed. We start with now an individual, me and you, as an entity. So we would want to look at it.
Oh, we are also considered as entities.
Yes, actually. When we talk about taxation of individuals, I would call it, so I can call it, taxation of me and you and the viewers out there. Yes. So we are interested in getting into the real facts.
Okay.
If I'm earning, if you are earning, what does the law say? You get my point?
Yes.
First, to bring it down, when you talk about an individual and in terms of taxation,
yes,
and the taxes this individual is required to pay, first of all, the law guides us that an individual, me and you, we are taxed on worldwide incomes as long as we are residents of Uganda as far as taxation is concerned.
Worldwide incomes?
Yes.
What are worldwide incomes?
That if you are here in Uganda and you are having other sources of income in any other country, and you are a Ugandan who is stationed here, the government, through URA, they are interested in actually having you pay taxes on all the incomes that you have earned. In taxation, we call it gross incomes. So when we are looking at gross incomes, we are looking at what you have earned within the territorial boundaries of Uganda, but also across the boundaries of Uganda. We are looking at incomes in terms of, you may be employed, that is a source of income. You may be having a rental, that is a source of income. You may be an investor in a company somewhere where you get dividends. That is an income. So when we are looking at taxation of an individual, me and you, we would want to know, if I have all these sources of income, what happens how am I treated in terms of tax regulations? Yes. Now, when we talk about, again, taxation of individuals, we cannot talk about taxation before we know how one earns. Because here, we are so much concerned with income tax.
Yes.
Because this is a direct tax that is charged on one's income. So, it is based on which type of income are you earning. So if you are earning from this source, I will start with employment income. Now, with employment income, where most of us fall, for us who are in formal employment, but also to say it's not only us, me and you. If you are a director in a company, you fall under employment income because you are paid at the end of the period. If you are Mr. Mukalazi, who is employed by Family TV, you are an employee. If you are a public servant who occupies a public office, anyone who occupies a public office is an employee of the public or an employee of the government. So we would want to know if you are earning your income through formal employment or you are earning your income through directorship, being a director in a certain company, how is this treated? As I had stated last time, that the moment you are in a formal employment, your taxation goes through a system that we call pay as you earn. I want to be clear on that. Pay as you earn is a form of withholding tax. And withholding tax is a tax they charge off your income before you actually earn.
So for it goes before you even see a message on your phone.
When we talk about pay as you earn as a form of withholding tax, it means actually the government receives before you receive. Because it is the obligation of the person paying, in this case the employer, that before you pay Dedan or Mr. Mukalazi, first take off this percentage for the government. So ideally, me and you who are in employment, we don't see this money, we don't touch it. We don't have a luxury of receiving and then paying.
We only hear about it.
Yes. If, for example, I'm paid 1 million by demo consult, I don't actually see the 1 million. Yes, as my gross income. I don't see this 1 million. By the time I receive it, it is less by 202,000 as my pay as you earn. But also to say that below 235, if you are earning in a formal employment and your earning is below 235, then
235 shillings.
235,000.
Oh, 235,000 shillings.
Yes.
Okay.
You don't pay any tax.
Why?
Yeah, I'm coming to that.
Okay.
That it is like the minimum the government allows us, that below this you are taxed at zero. It is like the minimum that can afford you to move here and there. So we call it it's the threshold for pay as you earn. That above that you are required actually to be charged the pay as you earn. Below that you are required not to. Now, even when an individual is, for example, earning through property income, let's say rental, the same threshold is applicable, that because rental is considered in annual terms, you look at it in 12 months. Now we get 235, then multiply it by 12 to arrive at that threshold. That how much is this minimum in a year that is free from tax? Now that goes to 2,820,000.
Yes.
That if I have a rental somewhere and I'm earning, before we go into taxation, any amount that is below 2,820,000, it is free from tax. Let me hope that one is clear.
Yes.
If one is in a business, yes, I know I will talk about the business in detail, but I want to bring out the issue of the amount that is taxable and the amount that is not taxable for us, me and you. That if I'm in a business that is not a company, as an individual, then any amount that is below 10 million, if I make sales that are 9.9 something, then I don't qualify to pay any tax. The taxation starts from an amount above 10 million. Yes, but now the question, of course, when as we shall see, when we go to business, the question is you are able to ascertain that you are above or below?
Exactly, that is a very big question. Yes. and that is what I'm wondering.
Because most of us, especially our brothers and sisters downtown, who are purely informal, who don't keep actually any record,
yes,
then it ends up being an issue of how do I ascertain whether I have made 10 or not. So what normally happens is that URA normally they pass around in these informal businesses, so they do some bit of interviewing. How much do you make in a week? When the days are good, what happens? Because they get just a rough picture. So the moment they get a rough picture, they will base on that to now estimate the taxes that you are meant to pay.
Okay.
That said, I will again first pause on employment income and look at business income or business taxation for individuals, me and you.
There is also business taxation for individuals.
Yes. What I hinted on first was employment income,
yes,
and how it is taxed.
Maybe before we leave employment income, someone would be interested in knowing, is there a specific percentage that should be deducted off your salary, or it depends, the taxation depends on how much you earn?
Oh, thank you so much. Maybe before I even talk about that, let me hint on something again that I'd left behind.
Yes.
Normally when we talk about employment income, quite often the question that comes on my desk is, if I'm getting this benefit as from my employer, if I'm getting this allowance, is it also part of the payroll or part of the pay as you earn system? Of course, Section 19 of the Income Tax Act guides us. If you talk about employment income, what are you talking about? It looks at, for example, the gross pay. If you go on leave and you are paid, or you forfeit your leave and you are paid, if you have allowances, if you have commissions, if you have bonuses, all of these compounded, they make what you call the gross pay. Yes. That by the time the taxman is computing, he's not looking at just the basic pay, but he's looking at your gross pay. It is only the MPs recently when they amended, and for them they are only taxed on their basic pay, and most of their allowances and benefits are actually non-taxable. But me and you, when URA is looking at how much I'm supposed to pay through my employer, then all of these benefits, there are a few benefits that are not taxable, but of course I may not go into them now. I want to tackle the question that you asked.
Yes.
The rates, that if you are a resident, a Ugandan who is here for tax purposes, then any amount above 235 to 335, you are taxed at 10% per month. Then any amount that is above 335 to 410, you are taxed at 20% per month.
20%?
Yes. Then any amount that is above 410 up to 10 million, you are taxed at 30% per month. The last one, last bracket, any amount that is above 10 million, it is taxed at 40%. So we have those brackets from zero, which applies from zero income to 235. The next one is from 235 to 335, 10%. Then the next one is from 335 to 410, that is 30%.
Yes.
And above we got 40%.
I was only looking at the unfairness between this bracket of 410 to 10 million. Yes. That one is a little unfair, but anyway.
Of course, when we are handling issues of tax, we cannot apply, what you want to apply is the tax law. So whether fair or unfair, we can only go back and ask the lawmakers to possibly look at these issues, and if there is a way, then they can think of amending the law. But
Okay.
as is, that's the situation. Yes.
So meaning this is what your employer is supposed to deduct off what you get.
Yes. Yes. And remember, when you are looking at these deductions, you have not looked at NSSF at that point.
Yes.
Because both NSSF and pay as you earn are based on the gross. So for example, if I use an example of 1 million, where I said that the pay as you earn alone on 1 million is 202, then as an employee, you are meant to contribute 5% to NSSF. So on the balance, which is 798,000, you again reduce a 5% of 1 million. So by the time you receive, you are in 740 something out of 1 million. Whereas in the contract, in words, you hear you are earning 1 million. But by the time you go home, what you have for your spending is around 740 something. Yes.
Aye. Wow. Now we get to you actually going to now taxation of business. Business taxation for individuals. That's where we are going.
Yes. Yes. Now, again, different kinds of businesses that we do as individuals. But I will start with the bracket of the informal people. Now, informal people are in a taxation bracket called presumptive taxpayers.
Presumptive.
Yes. Now, presumptive taxpayers was introduced by URA in order to simplify the tax collection and administration from the informal business players. Now, for this kind of category, the incomes are looked at again in brackets. For example, below 10 million, you don't pay any tax. If you are in the informal market, ideally by law, you are not meant to pay any tax below 10 million. But any amount above 10 million, up to 30 million, if you have records, and if you don't have records, the treatment is again different. Yes. That if you have records, the tax law says you are meant to pay 0.4% of your incomes above 10 million. 0.4% of the amount above 10 million.
If you have records.
If you have records and you are in informal, you are under presumptive taxpayers.
Okay.
But also, in case you don't have records, then for you are charged, as long as you are in that bracket between 10 and 30, you are charged 80,000.
Yes. Why? Why is this one so specific?
Because you don't have records. A taxman has no basis.
Oh.
It is more of an estimation. So they say, since you fall in this bracket, pay 80,000. But if you have your records, for example, let me assume you make 15 million. Then, as long as you have records, a 0.4% will be applied on the 5 million, because it is the 5 million that is in excess of the 10 million. Yes. But someone who does not keep records, as long as you are above 10 and you are below 30, 80,000. Hope you pick the difference.
Yes, I'm picking the difference.
Here, I think the brains behind those are saying, why should you be in a business and you don't keep records?
In other words, whether it is much or less, that is what you're supposed to pay.
Exactly. And it goes higher as we go into the other bigger brackets. If I can go through the brackets a bit faster. The other
is that all for those who fall under presumptive?
I'm another bracket.
Okay.
Because I said the
under
bracket, presumptive taxation. Presumptive. Yes, I said that below 10 million, no tax, or the tax rate is 0.
Yes.
Then above 10 million up to 30 million.
With records.
With records for 0.4%, or 80,000
without records.
Without records.
Yes.
If you go into the next bracket, which is now between 30 million and 50 million, either you are taxed at, if you don't have records, are looking at 160.
If you don't have records.
You don't have records.
160.
Yes.
Tax.
Yes. But if you have records, then it is different. It is 0.5%.
Slightly different from the other.
It is 80,000, because 80,000 is coming from the other second bracket.
Yes.
Plus a 0.5% of now the amount above 30. I don't know if
Pardon?
Yes. as we go higher, the computation is a bit become.
But it is important that people understand them, because at the end of the day, they are the victims.
They are the victims.
Yes.
So when you go into an amount that is above 30 million, but not beyond 50 million, so you are charged first the other 80 of the first bracket.
That is if you don't have records.
No, if you have
records.
Yes, if you have records.
Okay.
Now, the 8 of the first bracket
of 10 to 30.
Yes. Then you add 0.5% of the excess
30 to 50.
Yes, of the amount between 30 to 50.
In other words, if you're within 30 to 50 million, then you first pay the 80 and then they will compute
0.5%,
which is within this range. And then they add it onto the 80.
Actually, if I'm to put it right, it is 0.5% of the amount above 30 million, but does not exceed
50 million.
Yes, please.
I think now that is well understood.
Yes. So if you go on and go on, the last one, there are other two, but the last one, I want to move to another issue. So the last one you look at now, a bracket from 80 million
80
to 150.
What happens between 50 and 80?
Of course, that's also another bracket.
Oh,
okay. We can also talk about it, or we move.
We can talk about it briefly.
Yeah. So here you are also saying that if, for example, you are keeping records and you are above 50, but not beyond 80, and you have records, then you are charged a 0.6% on top of now the 160, the amount from the other brackets.
10 to 50.
Yes.
160.
Yes.
And then a 0.5. 0.5. We are taking a short commercial break. When we return, there is some mathematics. I know Brink had run away because of the mathematics, but we are taking a short commercial break. When we return, we are going to continue with these different taxation brackets, because you really need to understand them so that you are not cheated, if I may say so. Stick with us.
This is Church of Uganda Family TV, enriching lives.
Welcome back from the commercial break. This is our Family Hour. Today is a Wednesday where we look at finances and wealth. And now we are looking at taxation. We've looked at a number of brackets under the presumptive tax. But there is now this other bracket that you had started on.
Yeah.
That are 80 to 150 million range.
Yes. Now, that range, you find that the maximum tax you can pay, assuming you are not paying records, the maximum tax is 900,000. Now, the point I wanted to make on that, because quite often we say it is a tax that is actually making businesses fail, but I would want to make a clarification. But just imagine if you are in the business and you are able to make sales of 150 million, and the government is saying just pay 900,000. Can 900,000 make it a business fail, a business that is making 150 million?
No.
So quite often, what we are fearing is because we have not yet embraced taxation, that it is here with us and it is here to stay, and we keep trying to dodge. And in trying to dodge, we actually end up causing many more problems to our businesses, and we start blaming
perhaps
the tax system.
it's those problems that we've caused to our problems, our businesses.
Yes, but also to add something, that when you are in this bracket, the presumptive taxation bracket, one, you don't need to file a final return. It is simplified in a way that when you are paying, the assessment you raise serves as your return. So you don't need to go into the hassle of preparing the income statement, the balance sheet that you want to do your final return. No, that one is not required. But also it comes with some disadvantages. That one, your expenses are not looked at. Remember where we started from, we are talking about if you are in this bracket, you are paying this much.
Yes.
But that is in a way against the principles of taxation, because if you are, as we shall look at the other taxation of, say, companies, you consider how much a business has made, which expenses were incurred in trying to earn the incomes, then you tax the profit. But if you are in this bracket, I can call it the informal bracket of taxation, then expenses are not considered in arriving at the tax that you are meant to pay. But also, if you had a tax credit somewhere, it is not allowed. So in a way, this bracket disadvantages the taxpayer. But also to tell our people that in case you have found yourself in that bracket, this bracket, by the way, takes in even companies.
Okay.
But not formal companies. If you operate a hospital, you don't expect yourself to be there. If you have, let's say, an audit firm, you don't expect yourself to be there, etc. But the point I'm trying to make is that in case you find yourself in this bracket and you feel you can keep records, you can go into the hassle of preparing the financial statements, then you can apply to the commission and say, please allow me go into the normal taxation bracket, remove me from the taxation of the informal people, so that you can also have these benefits of, can I know how much I have made? Can I reduce the expenses that I have incurred in trying to earn this income? Then can the government tax me on the balance? So you can apply and you are allowed to go into that other bracket. Now, as we are talking, an individual earns through different ways.
Yes.
One, if you are a consultant, what happens?
Like you.
Yes. Of course, as we do consulting work, the first tax comes in as a form of withholding tax. That if Family TV has given me some job, in paying me the consultants or professional fees, then they pay, now they Family TV is required to charge me 6%.
Of the amount they pay you?
Yes, of the invoice amount.
Okay.
That should be clear. So, if now I have earned more, then I will have to go and I prepare my return and I declare. But as I'm declaring, I have to deduct the 6% because 6% is my taxes paid in advance. The way you would pay your rent and you pay for more months before you stay in.
Yes.
So here you are saying, government, I advanced you, I gave you this money in advance. So I have prepared my return and I have this liability. So before I pay you, please, I'm deducting what I pay you, what I paid in advance. That is one way. So you are taxed. The point I need to make here is also that even when you are a consultant, as long as you are an individual, the other brackets of pay as you earn will finally apply. When you put in your return, ideally, the rates that are applicable are the same rates as someone who is in formal employment. So the difference is only that for you as a consultant, possibly you are your own boss, but the other one is being given guidance and all that. But also, we have individuals, for example, who earn dividends. For you go and invest in Stanbic, you go and invest in any other company, you wait for when they have declared a dividend. A dividend is a return on investment, if I'm to simplify it. What normally happens is that you are required, the one paying you is required to charge you a withholding tax at a rate of 15%. And if it is the only income that I have, as long as they have charged the 15%, that's the end. I will have paid the tax. We have another category of people, say part-timers. You have several jobs. How do we look at these people in terms of taxation? One, that quite often you find you are employed by Family TV, so Family TV becomes your principal employer. But then you have maybe other two stations where you go for an hour or two. What normally happens is that on top of Family TV income, you also earn more incomes from the other sources.
Yes.
Also, those people paying you are also meant to charge you pay as you earn. But this pay as you earn, should be at a flat rate. That is, most of us, we are charged at a flat rate of 30%. Why are we charged at that rate? That our incomes are already above 410 in a month at our principal employer. So the bracket we are in is no longer starting from zero. We are already somewhere.
Okay.
So as they are charging us at a flat rate of 30%, which actually goes even to 40%, depending on your levels of income.
I mean, who pays the 30%? The principal employer, Family TV, or my side gig somewhere?
The side gig employer will charge you that flat rate of 30% because your principal employer will file normally starting from zero up to the maximum that you earn, depending on the bracket. But now, because most of us are already above 410 bracket, even your second and the other employer, even if they are 10,
they will all charge you 30%.
But in case your incomes are above 10, then the other flat rate won't actually be 30. Instead, it will be 40. Because we have gone into...
So how will now, who will know that it is now beyond 10 million? I mean, is it URA to alert any of them or to alert all of my employers that now my incomes are more than 10?
Okay, thank you so much for that question. Now, you realize that your income is another person's expense. I stated this before.
Yes.
What is the implication? That as you are paid, employer A, Family TV, wants to declare this expense called the salary to Mukalazi. Employer B also wants to declare an expense called salary to Mukalazi. And they are all declaring to URA. And today, whoever is declaring actually attaches your tax identification number. What does that mean? That URA officer will just put in your TIN, like, let me see, Mukalazi. We'll be able to see Mukalazi is attached to company A, attached to company B, attached to company C. All that information is there. I talked about use of advanced technology employed by URA today.
Yes.
That we no longer have a luxury of hiding because now systems are being interlinked here and there. So even if you have 100 people and they are paying you, unless those people who are paying you are not declaring. But the question is, if they are not declaring, how do they benefit from this expense? Because once an expense has been incurred, the only way a business or an employer can benefit from it is using it to reduce income tax for the business. So if someone is paying you and is not declaring to URA that he has paid you, in effect, this person has not paid you according to taxation rules. Yes, that when URA is computing taxes, even the money that you took, this employer will pay 30% of it.
Now, still on the other question. So they have put in the system, they have realized that I have 6 employers. So do they write to them and they tell them that you start charging him a flat rate of 30% or 40%?
Ideally, it is an issue of compliance from the employer first, even before URA comes in. An employer who is tax informed knows that, are you employed somewhere? So if you are employed somewhere, what's my obligation as an employer? Because I know, if I declare this, and URA has already identified that Mukalazi has a principal employer, then URA will follow up with the secondary employer. You have not fulfilled your obligation. You have actually under-declared pay as you earn for your staff who has a primary employer somewhere else. So the most of these taxes which fall under withholding tax, they are enforced through the employers or the people who are paying. So they may not come to you, but they will enforce it. Because it's the obligation of the person paying you to actually deduct. So if he has deducted less, then still the obligation is with him. Yes, actually, the law is clear. If an employer is meant to deduct taxes off you, and he fails on this obligation, when the government comes in through URA, they will make this person, the employer, pay. But the same law allows the employer to follow up with you. So we shouldn't take it that we shall take money and actually disappear. The government will deal with the employer, but this employer, as long as you are still together, then it means the next month the employer will get you. You can only possibly escape. If you can only escape if maybe the contract has already ended and URA is coming in and telling the employer, you didn't do your part here. Then possibly you will have gone with it.
Okay.
Yes.
Now we continue to the other. This was now people who earn dividends and then people who have multiple incomes.
Yes, I know we shall handle rental income, but as an individual, if I am having rentals, I'm also meant to pay a tax. And as an individual still, the tax is one, you are given a threshold. Remember the threshold I talked about, the 2,820,000. Even when you are earning through rental, you are given that benefit. It is not taxable. It is a free income. Then above that, today as an individual you are taxed at 12%. Taxed at 12%. It is as simple as that.
What's the difference between rental and ground rate?
No, they're totally different. The ground rent is the fee charged by the local councils. So that one does not.
It's not
anywhere as far as URA is concerned.
Okay.
So rental, we are saying it is a form of income you are earning through rental fees. So if you are earning your income through rental fees, then how do you contribute to your government? Through taxation. We have seen taxation for individuals the law being amended every now and then. But the current one that we have that we are implementing is that after allowing you the threshold, the 2.82, you are charged a 12%. If, for example, after deducting, if you remain with 10 million as your income, then you pay 1.2 to the government. That's the 12%. Then the 8.8 becomes your net. Yes. There are many others. If, for example, if I'm on transport, transport is a business like any other business.
Yes.
So what is important is what the taxman is interested in is how much have you made from your business. So if you have made it, say 100 million, you are taxed as an individual. The other rate still will apply. So it is specific incomes that are actually taxed differently. Like the way we have talked about rental, 12%. The way we talked about a dividend, 15%. If you are someone who deposits your money and you are earning, normally that interest that is earned, the government has already taken its share through withholding tax. Yes. Yes. A 15% is chopped before you actually earn. If you are investing in treasury bills and treasury bonds, a 20% is chopped as a tax before you receive. So some of us actually suffer from this. We suffer the burden, but we don't know it. Especially when taxes are being deducted before we earn, so we may not actually appreciate. That is why taxes that are enforced through withholding tax system, the burden is not felt, but also correction is easy because you can enforce on a few people who are actually paying. Unlike now, business income, where Dedan first earns his money, let's say from transport, from whichever business. I may be doing construction as an individual, I may be doing restaurants, any kind of business. As long as I'm having my records, I first earn. After earning, I spend. After spending, then I'm like, okay, what is remaining can I now share with the government? That should be the principle. You get? But the other forms where you pay before you actually earn,
you never even see what you pay.
You never see it, and some of us, unknowingly, we don't feel the burden, we don't feel the pinch. But in terms of tax planning, me who has a liberty, a luxury, to first earn, spend, then account for the balance, I think it gives me a better position. That's why you find that pay as you earn is one of the taxes that you can't dodge.
Yeah,
you can't dodge. You don't have that chance because money, by the time you are paid in net terms. Yes.
Now we're talking about still taxes of individuals. We've talked about, for example, I have my transport company. I pay that tax, but I also have these workers that I pay daily. Am I the one to feel the burden of paying their taxes, or there is a way they also pay a tax?
Okay, thank you. Recently, we have seen a development where the moment you are filing a return, a company, and you want to pay, even if you want to call them wages, URA is interested in knowing how are you managing the wages. If you have people you pay daily for 30 days, that's no longer a wage. You are just trying to structure in order to dodge a taxman. But that's not a wage. A wage is a one-off. Maybe you are doing some excavation somewhere. If you are in construction, you call 20 people to just dig and go, then that is a wage. But even when we are paying those wages, we must always support. You cannot just have figures paid out and you say, I have paid wages. I've handled a number of cases where one has even 300 million, especially if you are in construction, and I've had a client in power in construction. If you are to install power from maybe for 5 kilometers, then you spend so much in digging and putting these other poles and all that. But now, if you just pick from your pocket and pay, the taxman may not listen to you. What are they interested in? Can you at least have a simple format of people acknowledging that you are paying out? Tax is based on figures. It is not based just on theories and words. If you say I have paid, a taxman would want to see Mukalazi acknowledging by signing on this date we have paid so, and they have acknowledged the payment. Why do they go into this? They wouldn't want me and you to sit and actually inflate the expenses, as we shall see when we go into taxation of companies. If we had a chance, most of us would actually inflate the expenses and find ourselves making losses. But URA is very awake today that whichever expense that you put, they will ask you to actually support it with documents. Quite often, we have failed to support. And when we fail to support these expenses, of course, the taxman ends up assessing, and by assessing is saying, no, I'm not agreeing with you. What you are calling an expense is actually an income hidden somewhere. So pay a tax on this.
Okay.
Yes.
Lastly, as we wind up this discussion, someone would say, when a civil servant pays pay as you earn, probably they'll get it back in pension. And then someone, of course, will say, now what about me who pays pay as you earn when I'm in a private organization or private company? How do I get back this pay as you earn that I pay?
It is very interesting. Now, pay as you earn, ideally, as at our start we defined that a tax, one is a compulsory payment.
Yes.
And the compulsory payment that you make when you don't expect a return, an equal return, if I can put it, that you will pay a tax as Mukalazi, but this money will go and they will be taken to Guru to construct a road, for example, and you never possibly cross to Guru to use this road.
And you don't even have relatives
that's the nature of a tax. It's compulsory that you must pay it. Even when you are paying it, you don't expect a return. So it is not a circle where we are putting our money that then we shall get it back. That's not the principle of taxation.
There's no give back.
No. The only give back that we can look at are the services. And when it comes to services and accountability, then we need to hold accountable the entities involved,
okay,
but also our leaders. Our leaders, starting from the LC, all these people actually, they are part of the system, so they should help us understand how these things are managed. Yes, quite often I always get questions about accountability, but me, I'm a tax advisor, a tax expert. I advise people how to comply and pay taxes. Possibly the issue of accountability, we need to ask our MPs. They are the people who make laws, who knows how things are handled, so we need to ask them. But me, I encourage all of us that it is our citizen role to pay taxes, to comply if we want to be good citizens.
What are your parting shots on the subject?
Now, as I had stated before, we have reached at a time as a nation where we must all make a contribution. We cannot afford to hide anymore. Let's embrace tax education so that we understand our rights but also our obligations. That way, we shall start a journey of compliance, we shall do our part, we shall fulfill our obligations, and we shall be peaceful Ugandans as we demand for accountability.
Thank you so much. And
thank you.
Thank you so much, you who has been following through. I believe out of this conversation, you now realize that, one, it is prudent that you pay the taxes, but also it is, you can never run away from URA. Whether you are a business person or an individual, they'll be waiting for you in the corner. So it is important that we do the right thing. At the end of the day, we keep on crying about poor services. Now, the only way the services can be bettered is when we comply and pay the taxes, because this is the only way the government gets money to do all they are supposed to do. Thank you so much once again. Edrine, Osteen, Mukalazi is my name. Didmas in transmission, Brinko, and the entire team. It's a good night. Meet again tomorrow as we discuss leadership and governance.